everyone, welcome to Financial Foundations. I'm Shannon Acosta. I'm an advisor in CFP at Benchmark, and I've got Elian Levatino with me today.
Hey, I'm Elian, also a financial advisor in CFP at Benchmark. Welcome to our conference room. You'll notice a little bit of a different backdrop today. These are all of our older books that make us look really educated and smart. But next time you come, make sure you come to the conference room and check it out. It's a pretty cool place.
We're in the month of June, which is hard to believe, and we're going to be talking about investing this month. In our first week, the 3 questions we'll tackle are: what is investing? How do I know when I'm ready to start investing? And then why should I invest? Or why do some people choose not to invest? And I think I'm going first.
Yep.
The first one. There is a difference between saving money and investing money. When you save money, you amass it into some place that's not going to change or grow. This is what your emergency fund would be for, as we've talked about in previous videos. When you invest money, you put it into something that's going to grow for you. It's pretty straightforward. And there are a few different ways that you can do that, a few different ways that your money can grow, and we call those investments. You can do stocks, bonds, real estate. These days, you've got stuff like cryptocurrency. You have land. You can invest your time into something. You can invest in yourself to produce, future output. But specific to what we're talking about, we'll spend most of this month focusing on mutual funds and stocks and a little bit of bonds. How do I know when I'm ready to start investing?
Well, welcome to the investing part of Financial Foundations. If you've been watching these in order, you'll understand why we waited until now on the investing side, because there's a lot of things to do before then. We've talked about budgeting, we've talked about saving, we've talked about debt, we've talked about the things that we would say were prerequisites leading up to investing. We want you to have your financial world in order so that you can take full advantage of investing. It's really hard to invest when you've got so many things going on simultaneously. If you're trying to pay off debt, if you're running something, a negative cash flow every month, if you find you just have too much money going out and not enough coming in, but you're still trying to invest for the future, you find yourself going into debt to invest. So we want to help you do all of these things in order so you're ready to invest when you've had all those other things taken care of. So we're going to encourage you, yes, going back to the B word or cash flow plan, that we want you to have all that in place on a monthly basis, know exactly, we've talked about it before in the budgeting lessons, at the top, saving and investing and giving and then everything else. Where we flipped your budget upside down, where those things are taking priority, those things have a name, you're giving those dollar bills a name and saying, I am setting these aside for the future. So if you've got all your debt paid off, have no debt other than your home, you've got a fully funded emergency fund, meaning you have some cash set aside for a rainy day. That cash is not to be invested. That's going back to what Shannon said. You have a savings bucket and then you have an investing bucket. Part of that savings bucket is having a fully funded emergency fund. So after you've paid your debt off, you have a fully funded emergency fund. Now we can start talking about how to turbocharge retirement, because you don't have payments going out to anybody else. Mm-hmm. This is your money. You get to use it for your benefit, and now you get to throw a lot of money towards that on a monthly basis. You'll find quite a bit of success doing it that way. The other way, I think you're going to have too many what I call windows open, and trying to open and shut the windows depending on the weather that's just going to get you really flustered. So we want you to focus on one thing, do the first thing, do the second thing, do the third thing, and then focus on investing.
And that leads into why should I invest? Our last question. It's easy. It's almost magic. If you put your money into an investment and you leave it there for a long period of time, keyword, long period of time, keywords, it's going to work hard for you. So you're working smarter while your money is working harder. And the sooner you start, the sooner your debt's paid off, and the sooner you have money in your emergency fund, the more you have time on your side. And when we're talking about investment growth, time is one of the biggest factors in compound interest and the way that your money grows. You also want to make sure you're keeping up with inflation. Think about how much gas cost 5 years ago and how much it costs today. Think about how much your property taxes have increased or how much your grocery bill has changed. That's normal. There's nothing wrong with that. It happens over time. But if you spend your whole life just putting money into cash, you're not going to be able to keep up with it. You're going to spin your wheels, and by the time you retire, you're going to have a big pile of devalued money that's not going to be able to support your lifestyle. So we use investments to plan ahead and make sure that whatever your lifestyle is today, that you're saving toward that and letting the market help you keep up with the rest. Am I missing anything?
I have a friend that talks about an army of dollar bills, that your dollar bills are your soldiers. And at some point, you're going to build up this army of dollar bills where they're working harder for you than you can with your back and your brain. That you have your income, but if you're able to set enough money aside and you've invested for the long term, those investing dollars end up paying you back for all those years of sacrifice. You get to reap the rewards of now you get to live on those dollar bills rather than on your own what used to be your 9-to-5 job.
And it can be disconcerting at times because investments do change in value. Over the long run, they go up, but there are some periods of time when they do go down, and you have to write it out. Because you're debt free and you have an emergency fund before you start investing, you can psychologically weather that without panicking, without taking money out of the markets. I mean, ask any successful person who is retired with wealth or with enough money to get them through, and they're going to tell you, yes, you need to be investing. But why do some people choose not to invest? Because there are people like that out there.
Yeah, I think fear is real. I think fear of the unknown, not understanding things, not really getting your hands dirty and learning what investing is about. I think hearing stories from friends that say, "Oh, I lost everything." Well, I mean, there's some hyperbole in there. There are some people that have lost everything, but they were being incredibly risky with what they were doing. We like to call it calculated risk. Looking at what the whole range of investments are, what their risk tolerance is, how they've performed over the long period of time, and that's something that we can teach. But we also want you to be a part of the decision. So when you come see us, we're talking about these investments. We're helping you understand what it is that you're buying. Never buy something you don't understand. That's another thing that we preach a lot from here. If you're not investing, sometimes there's just a paralysis because of just fear of the unknown, or it's just something you're indifferent to. You just want to hold everything in cash, and if you want to do that, that's okay. But I do think you're gonna find things a little bit more difficult later in your later years when you're starting to plan for retirement, because to Shannon's point, that money hasn't had a chance to grow, and it won't be growing while you're drawing off of it in retirement, which that's kind of a double whammy when that time comes. So try not to let the fear hold you back from it. Try not to let the unknown hold you back from it. Come see us. Come talk to us. We're happy to talk through all that, help you understand it. Hopefully you have some epiphanies and a light bulb goes off and you get a little bit more comfortable with it as the days, months, and years roll on.
And what about the 50 or 55% of people out there who think that they can't invest because they don't have enough money? Is that true or false?
It can be true depending on who you go see. I will say some financial advisors or some institutions, they have minimums. We don't have that. Other financial advisors don't have that. So try not to let some people go, "Oh, I don't have hundreds of thousands or even millions of dollars to invest with you." That's not really how we function. If you need help, we're going to help you. That's part of the heart of Benchmark. One of our values is being missional, meaning if you need help, we're going to help you. So if you're willing to be taught, we're willing to teach it. So let's sit down and talk about it.
That's week 1 of investing. We hope that you'll join us next time too. We're going to talk about a couple other questions that I don't remember off the top of my head, but we will see you there and look forward to it.
Bye, everybody.